This is Jeff Cooper with the Daily Market Report coming to you on Monday, about an hour before the close. In late July, in the Daily Market Report, we flagged two important resistance levels in the EQs, 180 and 185. You can see the resistance up here on this upper rail of a rising channel. It comes in at 180 with the potential up to around 185. On July 25th, right here, 180 degrees straight across an opposite, the important January 26th high over here, the Qs broke out above a trend line for 2018. The breakout was followed by a large range reversal day, outside down reversal day 2 days later, right here, underpinning the idea of a false breakout. The late July breakout echoes the mid-March breakout over the January high. So here you can see the January high was cleared, led to an large range outside down day, similar to the same pattern on the breakout over this same trend line with a large range outside down day here. Indeed, a trend line connecting the January top and the June top defined the March and July false breakouts. I created a trend channel by paralleling a trend line from this year's tops across the early February low and the April lows. So this trend channel is defined by the letter A here, the upper rail, and the lower rail here at A. Note the deep decline following the mid-March false breakout right here to the bottom of the trend channel. Now there is a second trend channel right here, B, which bisects the upper rail of the green channel at the late July high. So the more confluence and intersections of price that you have at these trend lines, the greater the odds of a reversal. So you can see that this second trend channel B is created by connecting a trend line off the February low and the April low and paralleling it across this open gap here, the breakdown, and the mid-June high and this high here, and you can see this false breakout here. So here's the second channel here. This reversal is even more important than the March reversal for various reasons. I mentioned that you have an intersection of trend lines here, and at the same time you have a potentially culminating fifth wave structure: one up, two down, three up, four down, and five up. And that often culminates advances to some degree. That said, last Thursday traced out an outside up day right here. So the trend is questionable, the short-term trend anyway. A failure below Thursday's low will do two things. First, it will trigger a reversal of a reversal. That's because this is an upside reversal, and trade below that sticks is a reversal of this reversal. That's a bearish event if we trade below this outside up reversal. Secondly, trade below Thursday's low that sticks will also trigger a rule of 4 sell signal. A rule of 4 sell signal is a break of a 3-point trend line, and that's this line here, C. You can see you've got multiple points connecting this, so it's actually a 4-point trend line. Additionally, point 3 is that trade below Thursday's low that sticks will also violate the 50-day moving average. That's this blue line here, right here. It comes in right near this trend line. And the last two tests of the 50-day here and here have defined support and have held. So, an authoritative break below the 50-day line will see a change in character. You will have a break potentially below this 50-day line, coinciding with a break of this trend line up from April, coinciding with a possible break, coinciding and underscored by this reversal, I should say, below last Thursday's upside reversal day. Why look at the potential for failure? That's because of the intersection of these trend lines here for the whole year at these upper channel, at these both of these trend channels, in league with big picture support that we've big picture resistance that we've gone over many times last month, pinpointing the 180, 181 to 185 level as resistance. There is still potential to 185, but caution is warranted, as downside pressure from this pattern will deliver an important message consistent with the big picture August time and price factors we've been pointing to. Now, you can see one other thing I wanted to point out, that this last test of this trend line in league with the 50-day moving average was defined by a turn down in the important 3-day chart. And that 3-day chart turns down when you get three consecutive lower daily lows, which we had: one, two, three. Now, last week, actually on Friday, the 3-day chart turned back up. One higher high, second higher high, third higher high, and potentially bullishly, we're extending today. However, rapid flipping of the 3-day chart, which you're seeing now, immediately it turns up, down, and back up. That expansion of volatility in the 3-day chart often signals a change in trend. So that's it for now. This is the level to watch, and we'll be back with more tomorrow. Appreciate your time. Thanks for listening.